Okay, welcome everyone. Stock market technical analysis. We have the Fed today. So it's Fed day, big day. They report here in about 20 minutes. So I'm going to try to keep this video relatively short and get it out before the Fed reports. So I want to talk about that real quick. The Fed is anticipated to talk about a 0.25% hike in March, and then likely going to signal, I think, about 4 rate hikes this year. And then, that's what's kind of expected. And so the market's going, if that's what they do, the market's likely going to take that with, it'll understand that. Now, if they do come out and talk about reducing their balance sheet, I believe the market's going to view that as hawkish. And if they kind of back off on that, then I expect the market will receive that as dovish. Okay, so we're really talking about the reduction of the balance sheet, and that's really going to be the kind of the pivot, I believe, in what they say. Now, the market's already sold off pretty good, so we'll see if the Fed kind of tries to back off. Again, I talk about the Fed wants to walk the market down. They don't want it to crash. They want to walk it down. We've already had a decent correction, and the market has broken many technical levels, so I do believe it's a sell-to-rip market. But if the Fed comes out dovish, they could cause a rally that we'll look to sell into. We will look to short into that rally. So again, if the market starts rallying today, that doesn't necessarily mean it's a buy the dip moment. It's actually probably going to be a sell the rip moment. So that's how we're going to treat it. Let's look at the charts here. The SPY right at the 200-day moving average right here. So you can see this is as far as I think the SPY is likely going to go. However, I have one scenario where the SPY could rally all the way up to about 450. This would be the area you'd want to short at, all right, in my opinion. So if it does rally up to 450, that's a very clean entry for a short position. Again, if you look at the 60-minute chart here, that's about, that's kind of about right in this range right here where we held support. It was support here. We finally broke. So if we rally up there, that's big resistance right there. And that's the area you want to short at, all right, with a stop slightly above. But I think if they're going to rally it today, they'll rally it right into that resistance, and that's about the extent of where the move would go after the Fed. There is a possibility for this. So I want to talk about Qs. So you'll see Qs is trading right around this 352 support zone. The 200-day moving average for the Qs is right up there about 365. And we've also got resistance at about 361, 360. So resistance on the Qs is right in this area. So what I think could happen is the Fed comes out dovish. All right, they're going to hike rates. It's in March. That's pretty much priced in. But they're going to walk back and try to come out dovish. The market might read it as temporary dovish. They're going to pop the SPY up to that 350 area, and they're going to pop the Qs right into the 200-day moving average. And that's going to be major resistance on both indices, an objective area to short at. So that's what I'll be looking to do if we get a rally. I'll be looking for it to rally into these levels and then looking to short, as we get up there. Okay, so that is it. 200-day moving average, about 365. Watch for these levels. Now, gold also typically moves on the Fed because the Fed's all about interest rates, and gold, interest rates in the dollar. So we're going to want to watch this. Now, if I go to the daily chart here on gold, you can see we now have a third reaction on this trend line. So it's pretty much official that we've got this isometrical triangle, which is a indecision pattern essentially. So gold is longer term. Gold's in a bull market. All right. It started that bull market back in 2018, and it's been rallying ever since. It's been moving higher. Now, over the last, about 15 months or so, we've been in a correction within this bull market. All right. I think we're likely going to resume the bull market today, but we need to see what gold does. So gold's in this triangle here. The major levels to watch is a breakout above the triangle. So right now, today, that's sitting about 1855. So we start to break out, and you're going to want to see a nice impulsive breakout with a close. It'll look very bullish. It'll be ramping higher. You'll see it. That would be our breakout. And if we get that, I think it's very likely that we've started the next leg higher and really broke out of this big, long triangle pattern that's been put in for quite a while. I mean, I could even extend this out to there. This triangle pattern's been in play for over a year, right? The other alternative or option of what might happen is right now we're at this 1833. You can see that's been a key level, right? We've been resistance here, 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 one false breakout, then it reacted again and then again. So we got 5 reactions at that 1833, 1830. It's about 1830 really. And we're right there now. So if we're going to break down after the Fed because they come out hawkish, and then the market should start selling off, and gold will probably start selling off as well. We could sell all the way down to support, which is right there at about 1796. It's a good size move in gold. That'd be about a 2% drop, but that would be the area where you'd likely want to buy. All right. And unless you break this trend line here, then that's the bull market support line right there. So I don't know which way it's going to go. I want to kind of prep everyone for the various scenarios. Typically, so the way I'll be playing it is if I start seeing breakouts in gold, then you could always take a trade in NUG, NUGT. That's a 2 times leveraged gold mining ETF. I use it. I would probably just use it as a day trade mechanism. And if we get that rally, that ramp, we're probably going to ramp up to the 200-day at 56.20 on this NUG. And that's about a 15.5% move. So good size move, and that would be on that breakout scenario with gold. So for me, that would probably be the trade. I'd probably close it out up there. And that is really it. That's really all I want to point out. I mean, as I look at some of these charts here, like Qualcomm, we're right at resistance right here. So that's key resistance. We should get rejected here is what I'm assuming. All right. Maybe after the Fed, they pop it up and then it fails. I don't know which way it's going to go. And then some of these FANG stocks still below their break. Amazon has technically been broken. If you look at the chart, this is your bull market, even on the weekly chart, this is your 12-year long bull market in Amazon, and we clearly have a breakdown. So whether they want to, pop it up, up to this trend line, this is resistance, this is where it should get rejected. All right. We've already had a weekly close, so that's a sell signal. And so any kind of rally I'd be looking to sell into. And I'll do that via the triple Qs. All right, I'll use that as my instrument for shorting, and I'll wrap up here with IWM, guys. Guys, leave me a thumbs up if you value content. I'm trying to be timely with the market because again, opportunity in the markets usually is you have to be on time in order to seize the best opportunity. So I want to get this out. If they rally IWM, I'd expect it possibly to rally up to 209 right here. Okay, that's big resistance. I'm on a weekly chart here. If I go to the daily chart, this was big resistance. All these longs have been trapped. Okay, they've been trapped long and they're taking on losses. So any kind of rally, you've got a wave of sellers right up here at this 209 area. So if they rally it up here, all right, that's a key area to short. All right, we'll probably run up, tag that, and then reject. All right. That's all I got, guys. Leave me a thumbs up on your way out. Good luck, and we'll just evaluate, how the market, how it plays out after the Fed comes out. Don't take that initial reaction on what the Fed does. You're really going to want to just give it a second, let it breathe to really understand, because it can get pretty whippy when the Fed reports, and you got the algos firing off, and they're a lot faster than what you can trade. So just watch those levels that I pointed out. That's what I'll be watching. And those will give us an indication on where the market's likely going and where the next big move is likely going to go. So, okay, guys, catch you on the next one. Bye.